really helping to democratize finance, lending, and access to vehicles around the world. And joining me, I have some absolutely brilliant guests here today. So guys, thank you so much for joining. I'm actually going to go around and ask you guys to kind of intro yourself, intro your roles and your organizations, rather than me give a little spiel. But so starting with Eric, could you, Eric, thank you very much for joining. Could you give us a bit of introduction to yourself and Planet 42, please?
Sure. Hi, everyone. Thanks, Doug. I'm the CEO and co-founder of Planet 42. We have a fairly simple business. We buy used cars and rent them out to people who otherwise would not have them. So the fancy way of putting it is that we democratize mobility. Our first and so far only market is South Africa. So I'm calling in from Cape Town. We have bought about 2,000 cars so far, and we just last week we announced a debt round, so where we got $10 million from a US lender to expand our portfolio here in South Africa. So our plan is to essentially every person who deserves to have a car, that they will actually have it. This isn't really a problem in Europe or the US. But in emerging markets, there's a huge, funding gap or mobility gap there, where people who actually have stable incomes cannot have access. They're not served by the banks or other, established players, and they can't get a car for them.
Yeah.
So that's where.
How many cars you can finance for 10 million?
About 3,000 more.
Horses?
Take. So we buy cheap stuff. Like the average car is 12 years old. 5,000 euros, something like that. So it's a small, reasonable car, like a 2008 Ford Fiesta or something. You drive to work, drop the kids to school.
Amazing. And that is so critical in South Africa, especially. I've heard it's critical really in South Africa to get around, to have a car. We're talking about long distances. So it's absolutely incredible. Eric, thank you so much. And also joining is Irene Sepp, the CEO of AskRobin. Irene, how are you doing? And could you give us a bit of background to AskRobin, please?
Sure. So AskRobin is a credit marketplace, and we operate in Latin America and African countries. We do Mexico, Colombia, and Argentina at the moment. And what we really do is we're trying to get a fair credit for people who are quite typically underserved or unserved by the prime banks. So a lot of that is in the domain of inclusion, giving people an access, giving people an options to choose, and all the way to actually help people to profile or build their financial profile and get the financial institutions to make them a special offer or personal offer, which oftentimes much better than the standard offer from the South.
Yeah, I think that's so critical. I think it's going to become apparent in this discussion how critical lending really is going to become in credit. And if payments were the fintech buzzword of the previous decade in the 20s, we're going to see some really exciting things. So Rain, thank you very much. And also joining us is Martin Willig, the co-founder of Bolt. Martin, how are you doing? Can you also give us a bit of background to what you've been doing at Bolt?
Yes, hi. As co-founder, then the first years, of course, everyone was doing everything, and then I was also part of expansion. But last few years, I have more been working on regulatory side, and also last 2 years, 1.5 years, it has been mainly our green plan and sustainability and CSR topics. So that is, we feel we have reached the phase as a company that we can turn more attention to this side as well. So what kind of impact we have as a company? So that has been what I have been dealing with. And overall, we operate in Europe and Africa, around 40 markets and 200 cities and about 50 million customers. So that's roughly what we do.
Well, thank you very much, Martin. Well, guys, I always think the best way to start one of these discussions off is to kind of give a bit of background to the state of the industry leading to the point where we are, because otherwise there's no point talking about what's happening in the future if we can't learn from what's happened in the past. So to give a bit of background, Rain, could I ask you, since 2008, how do you think lending has really changed to kind of democratize people around the world? Has it maybe been left behind by the other fintech verticals, or do you think lending in the last decade was actually at the forefront of fintech?
I think it pretty much is, and lending is not the most kind of hyped or most popular fintech subvertical, perhaps. Like people talk about investments and payments much more freely than the lending. But it's interesting approach to start from 2008 when the previous crisis was. I've been in the industry 15 years, and from my experience, 2008, 2009 were the years where fintech actually took the next gear on. And a lot of people started to actually think around improving the services. That's the time that banks were, in a way, closing their doors and windows for many of their customers, and not yet thinking to kind of innovate themselves or adapt to the new situation or so forth. So there was a lot of new challenging ideas and approaches, which in a way drive this movement of opening up, thinking things differently, putting customer in front of your business, basically serving customers really, was first time really understood. Because think about the banking being very bank-driven or bankers-driven market overall. And that's the first time I think customers were put on the spotlight or in the center of everything what they do. And it's been a fascinating story around the lending of fintech in general, how many different options, how much more kind of humanized it is right now, or transparent, accessible, and all this thing. And obviously in emerging markets, more narrowly, where we operate right now, access to credit is not for everybody. 65% of Mexican adult population doesn't have an access to a prime lending products from one of the big banks. They just don't. Simply nobody's giving them money. And at the time where a lot of new challenging approaches were born, some of them are now quite big already. You can't say they're mature, they're super far away being mature operations, but they are visible in the market. And another very important movement, in my opinion, where the very kind of manual micro lending with a pen and paper, agents running the tours, started to digitalize or running their digital transformation. And this been increasing the competition, challenges every single participant in the market, and that all into the customer favor. So I think it's a very relevant point. Like we're going to likely see a lot of innovation right after that COVID crisis as well.
Yeah, I think there's really going to be a time where it has to succeed, really. And it's interesting you brought up the Mexican example, because in Mexico, they had access to real-time payments network from SPAY very early on, one of the first early adopters, and yet lending was somehow left behind. So it's exciting to see what we're going to be seeing there. Now, with that in mind, then Rain, could I ask, do you think that this kind of industry, especially in emerging markets, has come about, the alternative lending side of things and other fintech innovations like that, has come about because of the banks being slow to adapt? They had the customer base, they had the kind of money behind it. Do you think that the sole reason that all these brilliant innovations that you guys have kind of brought together has come about just because the banks never decided to service this part of the industry?
I think it's an interesting point to discuss from the bank's point of view. They didn't really have a necessity or a need, I think, to push it too far out. I mean, you have enough demand and you are in a position you can choose your best customers, serve them, and make a hell of a lot of money in there. Like Santander, I think Mexico is far the most profitable market for them globally. So they can choose the top 25 that they serve right now is quite enough, doing their numbers and going it slowly. Another big problem there was the transparency or visibility in the market. So a lot of that demand is in a way invisible. It's people don't have the credit files, they don't have the formal income, money is paid out in cash, and that makes it very, very difficult to do right credit decisions for the banks. And now those small, nimble challengers, way or another, are actually unlocking that very problem. So they go very creative, looking at the different models, looking at the different data points, and trying to make sense of that, trying to build their patterns and justify that against the credit, policies that the banks have. Yeah. But I think even more relevant in here is the kind of good old micro lenders. Some of them have been 30, 40 years in the market, and this is very domestic business. It's very manual business. So you build a network in one of those cities or towns, like, you might be 2 hours from Mexico City and nobody knows you in Mexico City, but this town you operate, you're complete lion at the dinner table. Everybody knows you and you own your space. So you basically outcompete your competition and you are controlling the neighborhood, so to say. Now with those digital propositions all over the place, people who compete you from border to border, they don't care where you are. They just make their loans or mail proposition available for people. And that pushes a lot of these traditional conventional businesses to wake up and start moving.
Interesting. Well, Rain, can I ask your perspective from South Africa? Do you think that it was the failings maybe of the banking system in South Africa that have enabled innovations like yourself to succeed?
Yeah.
So
Just quickly,
Eric.
Yeah. No.
Apologies, guys.
I know we're so similar. That's why I grew the.
We were talking earlier about the haircut, and
at the
I
time,
for
people
some
were
reason I do
hairy,
apologize.
dry, yeah. People kept mixing us up, so that's why I grew the beard. No, yeah, I'm echoing definitely what Ryan is saying. Well, just to summarize, I mean, banks are big and fat and slow. They have a million other verticals. They do, checking accounts, credit cards, car loans, everything. And then the specific kind of like serving a specific customer, especially if the amounts aren't that big, I mean, for them, it takes a lot of effort. You have their procedures and sometimes even like, I don't know, credit, some credit boards or whatever you need to make the decision. It takes a lot of work, both, in time wise and also like resource wise. So and I mean, the interest rates are quite low. So you just, if you make a small loan, you're not going to make enough money. You have the same thing with car financing. So it doesn't really, I mean, we get this question all the time, like, why don't banks just, do what you do? But they don't want to take this risk. We're actually in South Africa. We're in a position where we're having early discussions with 2 established banks about financing us. So that's how much even they don't see us as competition, because we're taking the risk that they don't want to take.
Yeah.
So we as Ryan said, startups can be, nimble, flexible, and very quickly adapt to kind of new circumstances, which the banks really don't have the luxury to do. And then on top of that, you have all the regulation stuff. So like, if you want to go to a more risky market, like more subprime, then you will have to put aside like a larger reserve requirement, which again makes the whole thing more expensive. And especially in emerging markets, it's easy for banks to go like, I'm just going to focus on the best customers. It's anyway super profitable. There's nothing is pushing them into this like more risky or more difficult markets that we are operating in.
Yeah. Well, thank you very much for that, Eric. And so with that in mind, Martin, I've got to ask then if we could kind of move it back slightly from the emerging markets and look more at the Estonian side of things. How have we created this ecosystem where Northern Europe has this absolutely brilliant, innovative fintech scene and kind of tech for fin or services like Bolt in Estonia? What were the kind of groundworks that caused so much innovation to come from Estonia?
I think that, of course, the overall mindset of Estonians and the digital ID, or overall we have an ID system in Estonia, so every person has an ID code, and not many markets actually have that. Yeah. So I think that's a very strong baseline for building all or digital services, because you can actually connect different databases, use the data and add value on top of that, and that can create 2 digital signatures and all of that. So I think that's a strong background the Estonian government set already about 20 years ago, and we have been building on top of that. And also the ID card has been mandatory for all the Estonians. So basically that creates the tools. Again, we have many markets that have ID cards, but they are optional and people are not taking them, and they don't create the scale. So I think this is something that maybe the African markets can now learn from Estonia or other emerging markets, so that to establish these kind of things. But if we look at Germany or some other established Western markets, they are not trusting their government so much that it's basically impossible today to introduce any kind of ID systems and stuff like that to really connect efficiently all the databases, the registers, and the data that the countries have. So Estonia happened to be in great spot, and also have a visionary government to implement that, and that sets the baseline for all the private sector startups and everything to really build on top of that. But of course, if we go out of Estonia, then we have to work with the tools that every country is offering. So and adapt to the environment there. So yeah, I just looking at our service, then in Europe, about 80% of people pay with card or electronic payment methods. If we go to Africa, it's the opposite. About 20% pay with cards and 80% pay in cash. So it's a lot of opportunities to really create and build all of these services in Africa. So if we see an example from Southeast Asia, then the two of the biggest ride-hailing companies, Grab and Gojek, they both have actually now turned, or they are turning into financial institutions. So there are stories that they will maybe even emerge and become really a big fintech company. So, but they started with ride-hailing, and we see the same, that in Africa, our average client is doing about 8 rides a month. So that's quite frequent use case. So building something on top of that is something that we are also considering. Maybe that's an interesting area to go. So yeah, that would be shortly my view.
Yeah, it's interesting to hear how KYC and the onboarding process with those ID cards is so imperative to creating a kind of innovative ecosystem. So Eric, can I come back to you with that? In South Africa, yeah, how when it comes to credit and lending out and with all these vehicles, how have you seen the KYC process, and do you think that's going to be critical? Do you agree with Martin that KYC process is going to be critical going forward?
Yeah, it certainly is critical. You need to know like what you need to be sure like who the person is that in our case we're buying a car to, and Bolt's case they need to know who's going to actually drive the car. South Africa actually is pretty well developed there, and I think Martin's right. Like if I'm like right now, you can easily see that like whatever South Africa is, if you compare to Germany, it's like way less developed. But because they actually have this unique ID already, they have ID cards as well. They don't have digital signatures yet, but you still have, every citizen has a unique ID code. We have so far, so we bought more than 2,000 cars. We have one suspected case of kind of identity theft type thing. But we're not entirely sure. That it just might be that the customer, it was actually this customer, and then they had buyer's remorse, and then just said no, like my shit got stolen or something like that. But the point is, like, there's one customer maybe out of 2,000. That's nothing. So like you can be pretty sure that the person, the person is who they say they are, and obviously that, like, without having that, then you have nothing. Like, I mean, I think Ryan can maybe tell some stories as well, how it is for, let's say for some lending companies when they first enter a market, and then just like what the rate is, where basically, the person who you thought you gave money to actually wasn't the person. So when you're looking for payments, then they're going to say like, what are you talking about? Like this is me.
And lending, it looks really bad for a early or a young market interest, but it's an interesting point what we're touching in here, and what Martin was saying about the ID card have been quite some years already as an infrastructure in a country. So in the countries where it isn't, it's all landing down to the trust. And what we see a lot in Mexico is people don't trust one another. They don't certainly trust the banks or any online operation. And it's interesting to think like the trust is not what is kind of happening instantly. It's learned. It takes time to create a trust or trusted environment in there. And I think Estonia have been extremely successful with its early infrastructure, teaching the trust in the people. So I have no problem identifying myself to the bank service, giving that access to a third party, the way we use the kind of early open banking service and all this thing. In emerging markets, this is all very early. And the part of that is people are not used to that. They don't have experience, so they don't trust it. And that causes a lot of problems. But another angle to that is now with listening Eric and African countries who are kind of building that infrastructure right now, you're building that together with the services. We started with ID card, and that was just a plastic card, literally. I think the state of the public government service is one of the first ones actually adapting there as a service layer. What can you do with this card? Or you can declare your taxes very quickly and all these things. So I would expect that development curve be much, much faster in those emerging markets once they're actually putting these two things together. It's a government-controlled infrastructure, which kind of stamps the trust in there, and then the creative services, which is taking the benefits of that, building the value layer for customers. But back to this kind of the fraud and stuff. I mean, it's you're going to go out from Estonia. It could be a European market as well, but definitely in emerging markets. That's really the moment that you learn around the fraud, what the fraud actually means, and you're going to learn it in a hard way. I mean, in the credit world, out of all the applicants, you could expect 40 to 50% being fraudulent. Like that's a soft fraud, hard fraud, organized fraud. I mean, you're gonna feel yourself like complete rookie there, like surrounded by the cowboys who all want to get your blood, basically. So it's very, very tough, very costly journey, and that of course causes, you know, in the lending world, it's balancing your credit risk or it's your price positioning and credit strategy, credit appetite in there. So the good customers are paying the cost of defaulting customers, and that's really unfortunate. That's straight up not fair, but this is how the economy works. So any work you could do or any effort you can put to the innovation in there makes literally hundreds of or tens of, no hundreds, hundreds of millions of lives are much better just because of that. If you can get them to actually identify themselves, trusting the service, and that would take the price down. You know, that's a big thing in it.
Interesting. I mean, it really does show just how important KYC is to establish that level of innovation and friendliness going forward. But if we were to kind of remove that kind of almost negative aspect of protecting against fraud and just looking to the future to see these exciting innovations in emerging markets, within payments, which obviously is such a huge part of ride sharing, the ride sharing customer experience, we've seen huge innovations in emerging markets. So with that in mind, Martin, have you seen in any emerging markets a kind of leapfrogging when it comes to innovations that we could maybe, if I'm going to make it more Euro focused, especially with Estonia here, that we could apply to the ecosystem here in Europe?
Yeah, I think what trends we can overall see, of course, one is the green, the other one, I mean, in Europe, I think payments are considered quite much commodities. So most people are banked and they can get access to credit and so on. So I think that is already here, at least this is relatively common. So where we see opportunities definitely is all the emerging markets where a platform like us can do all kinds of things. So start introducing balances and what we see from Southeast Asia as well is like the taxi drivers can become ATMs or things like that. So you can pay in money and basically take out money and then stuff like that. So you have basically moving assets. But the other innovation, of course, what's happening is all towards the micromobility, and that's what's happening in European side. So we see that besides cars, the car sharing is coming along in Western markets, no more in Eastern Europe as well. Micromobility of all the scooters, e-bikes, all of that infrastructure. And of course, also integration with public transport. Because we see that it's very much two groups of people who use private cars and other people who can't afford cars and then they use public transport. But now we want to start mixing them more and with all the micromobility and all of that, we can start providing multimodality. So people could actually ditch their cars overall and then use multimodal opportunities. So you can use some way with bus, then you walk and take the scooter or whatever the things are. So that's one way. Or the other trends we see in emerging markets is maybe we can overall skip the car ownership. Of course, that's something that is not that good for the Planet 42 if people are not buying cars.
Fine.
But we see that happening already in India and some trends also in Africa that in Western Europe everyone basically have cars, but in emerging markets maybe that option is left out, so that when people move to the city, get jobs, get on with their life, then they have a question: should I buy a car or not? And if all the services are on-demand services are available well enough, then you can use that. You can use Bolt as taxi service. You can rent cars from the same platform and all of that. So people would maybe even skip that. So yeah, it depends what way you look. There are like different kinds of innovation opportunities everywhere. So from being more green to even skipping some of the more traditional ownership models.
I mean, that's really interesting.
I'd like to take that up if possible. Yeah. So actually, Planet 42 is part of this kind of trend of less car ownership. So while our with every car that we provide to a customer, there is an option to purchase the car, but about 1% of customers take this, as so far have taken this up. So
it's more like using, or whatever. What's the good term for that?
Car subscription. Car subscription is the best term. Yeah. So
okay.
there's like you have like car sharing, which is like the City B cars are sitting in Tallinn. Hopefully, usually hopefully both cars soon as well. So you can just jump in, drive a couple hours, and leave it like wherever. That's car sharing. So what we do is car subscription, which means that it's like long-term car rental basically. So the point is that you take a car, you use it for at least 6 months, and then when you don't need it anymore, or like in our case, like when COVID hit, a lot of people lost their jobs, so they returned the car. They obviously need to pay a return fee as well, but unlike the banks, that doesn't ruin your credit record for the next 5 or 10 years, because we just take the car back. We either put a new customer in there or sell it if it's damaged or something like that. And then you can apply again once you've found a new job.
Incredible.
But I did want to ask Martin, when can I get a Bolt scooter in Cape Town, please?
Good question. I don't have a clear answer. We're definitely looking into it, but yeah, I see that still the crime and safety aspects in Africa are the main challenge of introducing services like that. So yeah, I think we would run some trials to really understand what's the situation on the ground. But yeah, I think it will come. It's just a question of when.
I think what both you're doing there is so incredible when it comes to democratizing the ability for people to just generally live their lives in, and almost I wish, as you said, Martin, that maybe Europe should maybe look at these other examples. Incredibly dense populations in small cities. Why does everyone have a car? So I'm really excited to see the future of that. If I could almost at Rain. Look back to maybe the last decade as well and how we're applying that now. After 2008, the financial services industry became incredibly regulated. And as a result, to operate in new emerging markets, across various different geographies, it became quite hard to kind of provide stringent reporting to regulators in this environment. So how do you deal with local regulators at scale, and how do you keep compliant when the regulations can change very quickly?
Mm-hmm. No, I think that one of the key points to start with is the regulation is actually good. So it puts the standards in the market, and that kind of, in definition, standardizing something means like you make it kind of obvious and set the rules for a game, basically. And I think Martin could agree with that in ride sharing and especially the scooters. I mean, even if it's uncomfortable, it's actually needed. So you can avoid the cowboys in there. And it always comes with both sides pushing. So some of them are plain stupid, some of things are really necessary. So I think the regulation or the compliance and the development around the past decade have been actually all in all kind of good thing. Yeah, it keeps the dodgy parts or parties away from the game and keeping the customer safe, more or less. That's at least the idea of any law in there. Emerging markets obviously much behind in terms of compliance. If you look at Europe, each country have their own regulation. Each country do it a little bit their own way. Sometimes they want to overplay the neighbors and kind of overdo it a little bit. Then those emerging markets are in quite early stage, I think, when it concerns fintech. But then again, Mexico, for example, was the first country in my course who did a specific fintech law. So the advance that they have is they're jumping over that decade or maybe more. They're taking the best practices. They see what have been working in one or another country, and they're trying to do it better, basically. It still takes a lot of lobby, both sides, the startups and the banks want to protect the market and so forth. But generally, the lawmakers can look what have been working, what actually been serving the communities better, and propose something what is already perhaps a version 2.0 to start with. So that's a good thing, I think.
Exciting. And Martin, you also mentioned that you'd been working on the regulatory side of things recently. So, I mean, what lessons have stuck with you when it comes to looking at the regulatory side when expanding into new markets?
So maybe just a background. So when we started 5-6 years ago, the expansion, then in Africa, it was a traditional taxi regulation. In some markets didn't have almost anything. So it was very Wild West. In Europe, the Western Europe was very regulated, and France and UK were relatively good examples where you had traditional taxis and then you could have the private driver model on the side. But we also have worst examples are Germany, Italy, Spain, that even by today, they haven't properly regulated the private driver model. They only have the traditional taxis, and they really enjoy their, let's say, monopoly, and they try to use every way to open up the market for competition. And then Eastern Europe, we have had a wave of last 3-4 years where all the markets have now adopted and created a new kind of regulation for both the taxis and ride-hailing, and it's usually a hybrid. So in Estonia, Estonia was one of the first with very good example. So here, drivers poorly have a choice. You get one license, government does your background check, and then you can decide if you want to only work with online platforms, you don't need anything besides your mobile phone. And if you want to work as traditional taxi, then you need to have the taxi meter because you need to pick up customers from the street, and a roof light and the price list. But it's fully flexible, so every driver can decide how they do it. And this seems to be for us the best model, which we try to also showcase to other markets in emerging markets, so they could follow the Estonian example. So that and it seems that drivers like it and all of that. So, but yeah, unfortunately, Germany, Italy, Spain are still almost closed for platforms like us, and it's very old school, traditional taxi-centric regulation. If we look at now scooters, of course, those have actually, this is a so new breed of things that no one, 2 years ago, the first ones went on the street. And now we see first cities actually coming up with tenders to start licensing it. And usually they give licenses to 2 or 3 operators, and then they consider all kinds of aspects, then from operations to sustainability to some kind of quotas, how many scooters they want to have on street, and up to getting the live data of operators. So how many they deploy, where they are used, what are the hotspots, and all of that. So they could also potentially plan the routes for bike lines and stuff like that to enable the micromobility. So yeah, we see all kinds of different ways. But if it comes more to the fintech and platform regulation overall, we see again now the US started a trend from California about the employment status of the platform. Then how do we call it? The guys who operate on platforms. So should they be employees? Should they be contractors? And what kind of social protection they should have? And it's a very kind of hot topic and debate, because we hear from a lot of drivers and couriers that they don't actually want to become employees because they do it besides of their other things, and then they enjoy the freedom. So if you actually introduce the employment rules, then the platforms could also put them in shifts and all of the other things that they maybe don't want to. So currently it's more an open regulation. But of course, the social aspects are important. If it's your only job, then how do you get your sick days compensations or other things? So this is in place, and we are also working with different insurance providers to figure out a way how to do that. And also overall platform taxation is also a big topic. And the challenges here is that platforms are so different. So if you take Facebook and Google, then they get revenue from advertising, and it's most comes to all their revenue. But if you look at platform like us, then we have the GMV, or total volume of rides, and our margin from there is only 10, 15, sometimes 20%. So do you tax the whole GMV, or do you tax the commission? So that creates, and then there are business models are in between. So that aspect again is very, very challenging. How do you classify these platforms, and how do you tax them equally, and all of that? So lots of interesting things happening in that space. The bigger the platform are, the more you need to work on also on these kind of things, and try to have an opinion, and also then globally, if we look, then of course European companies are still relatively small. All the big guys are coming from US and China. And then how do you have all of that aspect? So how smaller European companies could actually compete with a $1 trillion valuation US guys who have basically unlimited cash and all of that. So it's so many like interesting aspects in
I can answer that.
Please, Eric.
It's exactly how Bolt is handing Uber's ass to them in Africa. So it makes no sense. Like there's Uber, they have all the money in the world. How come they are like losing out to you guys?
I mean, it's fierce competition. I wouldn't say losing out, but it's of course when you really play smartly and you spend smartly and then you try to be efficient, then there is opportunities, of course, to compete. But it's very, very challenging because the other guys can just kill you with money. So you can pour in money. And if you're US or Chinese company, you have so much more opportunities to raise bigger funds. So Uber has raised, they started a few years before us, but we raised in, let's say, 2015, we had raised 2 million and they had raised about 2 or 3 billion. So the difference is like hundreds of times, and then you need to compete on our markets. So, but yeah, this is the world where European entrepreneurs need to come out smart ways.
Right.
I think that very much connects to where we started from. Was maybe a different in Estonian kind of mentality. So you don't have really a peak domestic market. So you got to go out very early, or you need to even start your business outside Estonia. Mm-hmm. And being kind of spoiled with all of that digital environment around you, you're going to land to some country like, South Africa or Mexico, and you realize you got to do everything differently. You don't have this infrastructure in there. So you got to be very, very creative. So adapting to the local market, understanding that market, customer behavior, culture, and all these things is essential. And I think this, what in my opinion, Bolt have demonstrated in the best world-class level. How do you understand the market and how do you design a product which actually works for those people in there? Not just taking your already working blueprint, works in Americas or somewhere else, and trying to push that to all other countries in the world. And I think the other point to this is I totally agree, the gig economy is growing like a mushroom. I mean, it's super popular. People don't want to work. They want to have the freedom and the flexibility in there, and they actually enjoy that. They don't want to be employed, even they're missing out some of those benefits related to that right now. This is where the movement goes. This is what people want, and I think it brings loads of push and triggers a lot of innovation. Martin already touched the insurance. Like how do you get the insurance working for those guys? And there are a lot of people who have already first answers to that. Are they perfect? Probably not, but they're going to keep developing that. Same goes with finance. Bank wants you to have your steady, stable salary. They want to look at your month-to-month affordability. They want to make sure that your kind of obligations and debt is in balance with your steady income. They don't want actually that to go too much or too quickly up or too quickly down. Quite opposite in the new fintech kind of propositions where they say, no, look, I mean, we look at you today, you work as much as you want, and more you work, more you can lend. And they adapt to this where people are going rather than pushing their own models and mentality to people. So it's super connected if you think about a mobility or micro-mobility creating opportunities shifting people's thinking and preference, and then a lot of other industries are actually following the path, saying, look, we have a huge market in there. We want to offer our insurance product or loans or payments to those guys. And it's big in there. It's very, very big in emerging markets.
Yeah, Rain, that leads me on to my next question. And if I could come to you again, Rain, in Southeast Asia, we've seen companies like Grab start to offer up financial services because of just how easy it is to use this kind of platform. So, I mean, do you think this is going to become more apparent, these new models of just digital appliance or mobility applications actually starting to bring in these loan products or these other financial services products?
It definitely is. Same examples in Latin America. Rappi is one big kind of gig economy player in there, and they have their financial services, and pretty much everybody's looking at that. We've been testing a couple of the markets. It's exactly what Martin said. It's where you have customers frequently using your platform. You're looking at the different services, and one of that is how these services are going to be paid. If you think about this, I mean, like, I'm going to take the Bolt ride. I'm not paying for my ride. It's paid for me. It's happening automatically. I'm not doing any transaction. I'm not pushing or approving anything. It's just done. And those emerging markets where the kind of credit card infrastructure or a credit line infrastructure is not so developed, the companies are actually trying to push that themselves. And it's probably many things in there. It's optimizing their own operation. It's easier than a cash. It's more safe than a cash. It's probably that they can, apply for a big chunk of money, like Eric just did with 10 million new debt facility. Congratulations. It's I'm going to actually take care of that. I'm going to build another service layer in there, which adds convenience for people to use those services with no hassle in there. Nobody wants to pay. I don't like. It's not 2020 or 2021 very soon. You want to get things done for you, so you don't need to worry about it. You don't need to think about it. And I think that's very natural evolution of the stuff.
Yeah, I completely agree. I mean, I think the success of a lot of these applications has just been the kind of the ease of payment. And it's weird to think that we didn't know that was actually a massive customer experience hurdle until we got rid of it. And then suddenly it's changed. So, I mean, we're starting to see payments become increasingly invisible. And Eric, I want to come to you with this because you've brought up the fact that what you guys can do is you can actually offer up almost this kind of car subscription service. So, with that in mind, how long do you think it is until we can effectively just have a society where people effectively just kind of subscribe for that car rather than looking or spending a huge amount of their budget and potentially go into debt just to afford a car when they could look to subscription services like yourself?
Sure. Yeah, I think the answer is a bit more nuanced. It depends on the market. So you may have seen there's loads of startups that raised money in Europe now, car subscription startups like I think Cluno and so on, Drover, I think in the UK. And I actually think that is not a good market to be in, because those guys are ultimately competing directly with banks. Because for people, the consumer, the option really is like, will I get a bank loan or will I get this car subscription? And the fact is, banks have deposits. That is the cheapest form of financing. So you essentially have, you as a startup go head to head with the bank, competing about who has cheaper financing. The bank will win. Whereas in here in South Africa, what we're doing is we're using this car subscription model, but in a completely different way. We are not option number 17 for the customer. Like, the customers who have options are, the highest earners, about 10-15% of the highest earners, they get, car finance from banks, no problem. It's easy. I mean, my own car has been financed by one of the big 4 banks in South Africa. Even as an immigrant, it was possible to get financing, not difficult. But for everybody else, there's people who have stable income, but they're not served by the existing system. So what we're doing, we're buying cheaper cars, used cars, so the cost outlay for us is less, and then we're renting them out. This is an expensive service. But again, we're not trying to compete on price. We're competing on access.
Yeah.
So the answer really depends on where you are. I mean, in Europe, it's basically just a nice thing. You can try a different, whatever. You take a first series BMW, try it out for a couple of months. Like, no, actually, my dog doesn't have enough room on the back seat, so I'm going to try a 3 Series now. Okay, this is cool. So now I'm going to go to the bank and get it. So it's a kind of a nice to have thing. I don't see car subscription being like a fundamentally important part of the kind of, let's say, transport mix in developed countries like Europe or US.
Interesting. Well, with that in mind, if we could wrap up then, and kind of, Rein, if I could come to you one more time. I think to end, when it comes to democratizing finance, fintechs can do as much as they can to make value-added services to democratize finance. But one of the key things to democratize finance is teaching personal finance. Why is this not being taught at schools?
I think for me, it's actually it's a phenomenon where the people always been walking to the bank, and banker is telling what's right, what's wrong for you, in a very principled kind of way. They know your finance, they can make sense of it, and they make their offers to you, and it always comes in the bank terms. What ultimately, especially lending fintech companies, the big challenge is, how do you turn that game around? How do you democratize in a very pure sense? How do you make people to have a power pack? And how do you put them in a position where they understand, and being not the finance experts, they understand where they're standing, and they're going to choose from the options. The very same way like you choose the restaurant. You want to go to the restaurant, you expect to be served, and you vote with your wallet, or you are the one to choose, basically. And I think that's one of the kind of ongoing challenges. If you think a kind of 10 years forward and the next decade, that's the big challenge for a fintech, to show and lead the way in front of the banks. And I think the other big trend, what I'm very enthusiastic myself, is open banking. Banks been pushing against it quite some time. Lawmakers have been basically clearing the borders for many. In Europe, it kind of works. But there will be an understanding one day that you can't do everything yourself, and you let these small, nimble startups to do the service layers that customers are in love, and you still can participate in there. You can take part of that economy by opening up. It's always better option than losing your customers to neobanks or mobility companies offering better services in their payments, credit facilities, whatnot. So I think those are in my opinion, two large kind of trend lines ultimately carrying us next 10 years.
Brilliant. Well, guys, thank you so much for all your input. It's been absolutely enlightening hearing about really all these hypermobility services that are really actually paving the way in other value-added services to kind of enable people to not just get around but access finance. And I think it's going to be a really exciting decade. I mean, we've always heard about how 2020 as a year has been pretty terrible, but it sounds like with lending and all these mobility services, it's actually going to be a really exciting decade. So guys, thank you very much for joining me here today. Well, I look forward to all the innovations we're going to hear from you in the future, and I'll see you soon.